Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And yes, she is back. How you doing, Anna?
I'm great. It's always so good to be back with you.
Thank you. Thank you. We've been doing this for 3 years, as we uncovered in the first video. Your playlist is amazing. Hundreds of hours of us talking about real world stuff, our businesses, coaching, helping people. It's amazing that you're such a go-giver. Thank you.
Thank you. I'm always happy to be here with you.
So I'm going to do something with you right now that I've done with none of my other experts. So this is the first time I'm putting this out there.
Awesome.
I now believe, given the CPI reading today, the broad-based inflation reading, it's just not oil or gas. It's pretty broad-based when you break it down. The idea, the notion, the hope, the prayer of a soft landing has now gone to zero. We will have, and I'm going to call it right now, the start of a recession in Q3. We need a recession. The only way out of this is a recession. And we're not talking this V-shaped recession nonsense of 2020. We're talking probably 4 to 6 quarters of negative growth, unemployment going up. This last little bastion of strong jobs is going to crack. And yeah, it doesn't feel good to say, but when you get a CPI reading at 9.1 on the back of 8.6 and then 8.3 and then 8.5, which were the preceding months, we forget it. We got to break the economy. It has to slow down. What do you think?
I agree with you 100%. I mean, we are listening to video number one. We're either in a recession technically, wage growth is still high. There's still jobs, right? But there is negative growth for sure, according to the Atlanta Fed. We're either in it and it's going to be declared in a couple of weeks, or they're not going to quite declare it because job openings are so high. Unemployment is still pretty low, but it's starting now. If it's not declared for Q2, it's starting now. All of the leading indicators of the economy, of recession, production, consumer spending. Give me 1 second. What's the other one?
Well, you got real wages. Real wages are negative.
Absolutely. Those three are already in recessionary territory. It's just job openings and unemployment that are still high, right? Yeah. But consumer confidence, producer confidence, housing builder confidence, all of it is abysmal at the lowest levels since 1970s. And so that tells me that people are going to be bracing for recession. They're finally going, this is not getting better. And they're going to quit spending. And when you have the demand come down significantly, that puts you into deep recession.
The other thing that I'm going to say right now is I actually think, because every time you're in a recession, something ultimately gets blamed, but it's always in the rear view mirror. Right. I like to call things early. I actually believe, Anna, real estate is going to be the cause of the next recession when they look back, because people may not know this. The housing market collectively, all of the little components make up 14 to 15% of GDP. I believe the Fed broke housing. I believe we have supply traps, right? Interest rate lock-in, whatever you want to call it. I believe we are about to freak out buyers and they're going to run away. Either they can't afford it or they won't do it, right? Demands a two-step function, want and willingness or ability. And I think transactions, as I've said before, are going to crash 30, 40, 50%. This could be the largest crash in transactions we have ever experienced. And that's peak to trough. Yeah. And
I agree with you.
That's a lot of money just sucked out. And then, oh, by the way, refinances are down 80%. We're not taking trillions of dollars out of our houses. The ATM machine is shut off. I think real estate's going to be the cause of the next recession. And at
least what they blame it on, right?
Yeah,
but again, they've helped cause this mass asset bubble in real estate where prices are unsustainable in most of the country, right? And already, because of the interest rates going up so quickly, and they will go up significantly more 2 weeks from now when the Fed raises them, if not 3/4 of a point, possibly even 1% higher.
What do you think? Do you think they do 75 or 100? Guess
75 or 100.
Yeah. I think they should do 100.
They should do 100, but I think they might be afraid. But I thought they should do 75, but might be afraid last time. And they finally said, this is our number one priority. Yeah. So it wouldn't surprise me if they go to 1, but 3/4 at least, right?
Oh, it's a lock at 3/4.
Already this week, we've seen published reports that new home purchases, 15% of buyers have backed out. That's higher than 2007, right? So it's one of the highest ever when you go back in history of the number of new home buyer purchases that are backed out. But guess what? Also existing home sales, almost 15% are falling out of contract because of interest rates going up. And suddenly they don't qualify for the home anymore and they don't have any more down payment. So that's already starting. And so all of those things starting, plus consumers starting to get freaked out and rates ticking up even another 3/4 point, you're going to have a lot of buyers back out. The other thing is supply is tightened, but it's starting to really come online. A lot of people are finally realizing, whoa, we really need to sell now. We've missed the boat. We want top dollar. And house prices are dropping across the country very, very rapidly. More price decreases than what we've seen in the last year and a half or 2 years. So housing is definitely already starting to take form. But as recession deepens and as rates go up, housing is going to get even worse.
Yeah. I've said for quite a while now, we're going to have the greatest transaction crash peak to trough that we've ever seen. I feel good about that call. I've also put out, since you were gone for 4 weeks, something I'm telling everybody is July 20th is a critical date. So actually 1 week from today. Why is that day important? Well, it's the day that this becomes real. The National Association of Realtors will report June existing home sales, and they're going to be nasty. They're going to be ugly. And that's going to be picked up by every media and repeated over and over and over. And as you've said, after July 20th, we've already seen buyers and sellers react. Anna, after July 20th, it's going to be like a ghost town. It's going to be such a mishmash of supply and demand. This is what I mean. Demand, it's easiest to understand. We already have a bunch of people that can't qualify, right? By one count, Black Knight, I believe 18 million people qualified at 3 that don't qualify at 6. And it's going to get worse. Now you have people getting scared, right? They're hearing all these things. We're going to see more in people that could buy decide they don't want to, right? The first step of demand. It's a want to and then an ability. We have 18 million people with no ability, no demand. We're about to have a whole bunch of want to that we're going to run away. So demand is going to be a ghost town after the 20th. But here's the funny thing about supply. You think a lot of people have FOMO from sellers today. You wait until the National Association of Realtors comes out and says housing is peaking or whatever they're going to say. And then you're going to get mom and dad around the table. See, honey, I told you we should sell. We can't wait till September. We need to sell now. There are going to be thousands of listings that come out. Yes. But here's the problem. And again, I only can say this because I've been here before. A lot of those listings are going to be want to sell, not need to sell.
Right.
And that's a big difference. And most people aren't going to get it. We're going to see all these YouTubers claiming inventory this, inventory that. They're going to put it on. They're going to realize they have 0 people showing up, and they're going to take it off because they don't need to sell, at least yet. It's going to be so messy in the next couple of months. Oh, my goodness.
It is. And it's so hard to predict because regionally and locally, everything is very, very different. And we've talked about that many times, that real estate is really hyper local. So we talk about the national things, and those are very, very true. But you'll see certain markets that are really resilient toward recession that have a lot of jobs, a lot of job openings, a lot of population growth, and not a whole lot of supply for the demand that's there. Until supply catches up with demand, demand has to come down quite a bit. Supply has to tick up a little bit. Housing prices may not crash in every market. They may stay fairly flat, right? Because the other thing is these, to your point about these buyers that maybe want to sell but don't have to, they're locked in. 85% of buyers are locked in sub-4 interest rate. So even if they sold, they got to sell it at a premium that allows them to go buy a replacement home at 6 or 7% interest mortgage rates, right?
And they're not going to do that. Most of them won't do that. Or they're going to rent. And the last thing you want to do is try to rent a home today. I mean, geez, that's expensive.
Exactly. So 2 other things that I'm just thinking of right now is one, if prices start to really come down in an area that have generally done well, even in a recession, that's the time to buy some single family homes, do it with more equity, less leveraged, right? So that you have a little bit of safety and still pretty good rates, hoping you can refi in a couple of years. It's still 30-year fixed money, right?
Always. No arms, people.
Absolutely. I'm really bullish though on multifamily. And to your point, it doesn't matter if it's a duplex, triplex, fourplex, or bigger. This is going to become a renter nation. People that can't buy or can't afford to buy, they are going to rent. And so this is the time to pick up rental properties, multifamily rental properties, when values do start to come down, and they will start to come down in some areas.
Yeah. That's the other thing that I get a lot of heat on this channel. So I talk all the time, and I'm going to repeat it right here, right now. The national median home price, single family homes, will not go negative in 2022. I agree, price cuts. I agree, inventory. But again, I believe Again, it's median, not average, median home price.
Yes.
And that's because the Fed broke housing. As we've said earlier, 85% of folks have a mortgage below 4%. They may want to sell. They don't need to sell, because what will happen, and I did the math yesterday. This is all from memory, so watch the video yesterday. Assuming you have your first time home at 300 grand, you put 50K down, your payment's like $1,500 at 3%. If you want to now sell that home, move that equity into a bigger home, your payment more than doubles because the rates double.
And guess what? A 2-bedroom apartment is very close to that $1,500 a month.
Exactly.
So you sell your house and move into an apartment. Why sell your house, right? So the other thing is when things come to a screeching halt, which, by the way, the Fed basically in Fed speak said they're about to break housing.
No question. Yes.
Said, hello, if you're looking to buy a house, you might want to reset that expectation, AKA we're about to make it too expensive for you to do it. You need to hold off, right? So we know that's what they're going to do. So here's the bottom line. When you start to see that housing slows, the rates go too high, there's still not enough supply for the demand, but then the demand plummets, right? Not only does that impact housing, but to your point that housing kind of leads some of this recession, housing is responsible for many, many, many jobs and many current job openings, right? So when you don't have your contractors and your new home builders and your realtors and all these people that depend on housing, your mortgage brokers, they're no longer have the pipeline of constant activity. Their wages are hit substantially as well. So that puts them into a recession, potentially even before the rest of the country's in a recession. And it just continues that spiral downward. So housing has a huge impact beyond just us as real estate investors. And what I'm thinking about, not only do I want to purchase and what do I want to purchase, but how am I going to provide really good housing to those that have really no great options? How can I buy units that is what they need? And that's rental units, right? People need a place to rent. So keep coming back to, where do I want to own properties that people can rent? What type of tenants are going to be least impacted by recession and be able to continue to pay? And that's nice A to B class areas, B, C plus class tenants, right? That have strong jobs, lots of jobs around, and maybe even take some Section 8 in the nicer areas where you have guaranteed rent payments in nicer areas. What happens during a recession is people will not move away from the good school, low crime areas. So if you can find properties in areas with a lot of jobs, good schools, low crime, figure out how you can buy those properties to weather a recession, and they're going to be the ones that the prices bounce back the best when we're done with all of this.
Yeah, the other thing, kind of wrapping up video number 2, that I'm telling people is, again, think about what I described earlier. Buyers ghosting, FOMO from sellers, need versus want. So what is my job as an investor? I never intuitively know whether a seller wants to sell or needs to sell. My job is to only write great offers, excuse me.
Yes.
I've actually changed what I'm looking at, Anna. The last 2 years, I had to look at first day listings because it was speed. I am now only looking at 30-day days on market. I don't look at anything before 30 days.
Right, I want a motivated seller.
I want to increase my chances of finding one. Absolutely.
Right.
So again, what I'm telling other investors to do, especially the new ones, I am not paying list price for anything. I am going to get some closing cost, if not all closing costs paid. I'm going to get them to buy down my rate. And I'm only going to do great deals. And then finally, because I'm lucky enough, we prepared, as we said in video 1, I can do more than one deal. My second deal will without question be better than my first. And then my third deal will be better than my second. You and I have done this before. I have no idea where the bottom is, but I'm going to keep buying the whole way down.
Absolutely. And that's the key. And it's one of the beauties real estate has above the stock market. Is in the stock market, you don't want to catch a falling knife because you could go way down. Some of these companies could go under, right? Or their earnings could completely disappear. You could be negative for a very long time. With real estate, we're in a recession. Let's say this is a deep, long recession and it takes 18 to 24 months, right?
Let's say it takes 2 years. Yeah.
Let's say we buy something and values still come down 10%, which would be considered a huge decrease in values, right? 10 to 20%. After that 2-year period, when things kick up again and interest rates are cut again, if the Fed does what they've always done, your values start to tick up, things start to normalize. So you buy these things with a long-term view that I can catch the falling knife in real estate as long as my deal makes sense for today and I can hold it and I've got good debt locks me in. I don't care what it does over the next 2 years because it will bounce back to the point of your spreadsheet that you did that goes back to the 1970s. Even with all the dips in real estate in the 70s and the 80s and 2008, still the average is increasing 1% above inflation per year.
Correct.
So real estate is really the safest bet that I think we can invest in during this time. Forget all the commodities and all the stocks and the energy and all this kind of stuff. Real estate is tried and true. People need housing. They need a place to rent. So what do we give people? Either food, utilities, or housing. I can't produce food and utilities, but I can provide housing. So it's one of the safest things you can invest in. Just get your mind out of the emotions, do good deals for today that cash flow and make sense. You can always make those deals better later. If things get better, refi them, sell them. You can boost your profits later, but just do really great deals today.
Very well said, Anna. We're going to close on that. Where can people find you?
You can find me on social media, Anna Kelly REI Mom, my website, reimom.com, and here every Wednesday now that I'm back from my summer travels.
Thank you, Anna. Take care.
Thanks.